Hundreds of millions of ounces of silver have vanished from global vaults over the last few years. The price barely reacted, until now. As of this morning, silver has officially crossed the $64 mark. Analysts are calling this the most significant breakout in modern trading history. And if you think you missed the boat because the price is up, you need to look at the bigger picture. Bank of America and major financial institutions are now confirming a breakout pattern, issuing safe targets of $75 by mid-2026. Even Lawrence Lepard, a legend in this space, is pointing to the mid-70s. But they are being too conservative. If you look at the raw supply data, specifically the inventory collapse in London and Shanghai, the math doesn't point to $75. It points to $100 by summer 2026. This isn't hype. It isn't a pump and dump. This is a pattern that has repeated throughout economic history, every time a civilization devalues its currency while simultaneously running out of a strategic resource. We aren't just watching a price spike. We are watching the repricing of the global energy transition. I am not a financial advisor, and this is not financial advice. But I am going to show you the four-stage pattern that suggests the move from $64 to $100 isn't just possible, it is mathematically locked in. If you think technology will magically solve this shortage or that central banks will smooth it out, you are overlooking the fundamental math. Numbers don't care about opinions, and the numbers are tracing a recurring pattern that most people never notice until it's too late. Market historians call it the commodity supercycle, and it has four distinct stages: setup, expansion, crisis, and explosion. Stage 1 is the setup. Prices are cheap, mines shut down, and everyone ignores the asset. Stage 2 is expansion. Demand quietly starts to rise, like when solar panels went from a niche hobby to a global mandate, but supply stays flat. Stage 3 is crisis. This is where the deficit becomes undeniable. Inventories drain, lease rates spike, and the smart money starts hoarding. We have been living in Stage 3 since 2020. Now, we are entering Stage 4, the explosion. This is what happened in 1979. Two Texas oil tycoons, the Hunt brothers, realized the world was running out of silver. They started buying everything: physical bars, futures contracts, even silverware. They didn't create the shortage, they just exposed it. The result? Silver went from $6 to $50 in less than 12 months. That is a 10x return in 1 year. Bank of America sees $75 because they are looking at a crisis. I see $100 because I am looking at an explosion. The feedback loop has already started. Panic buying tightens supply, which raises prices, which triggers more panic buying. We are tracking this explosion day by day. We are racing to hit 1,000 subscribers by December 31st, 2025. If we hit that number, I will release the killer video, the banned script that exposes the exact banks shorting silver right now. I'm afraid to upload it, but for 1,000 insiders, I will take the risk. So hit subscribe. Now, let's look at the history of these explosions to prove this isn't a fluke. Fast forward to the late 90s, the dawn of the internet era. Suddenly, the world was buying computers, cell phones, and digital cameras. All of them required silver. Silver paste in circuit boards, silver in switches, silver in connectors. From 1995 to 2000, analysts noted that global silver demand from electronics surged by an estimated 40%. But mine production barely budged. Why? Because of the byproduct trap. Most silver isn't mined on purpose. It comes from copper, lead, and zinc mines. If the price of copper is low, miners don't dig, which means silver supply drops even if silver demand is skyrocketing. By 1998, global inventory fell from 350 million ounces to 200 million ounces. The price climbed steadily from $4 to $7. It wasn't an explosion yet. It was the fuse burning. Then came 2008. The financial system collapsed. Investors fled paper assets for hard assets, and they finally realized silver had been running a deficit for a decade. The price spiked to $21, tripling in value. Now, look at the current chapter. In 2020, COVID hit. Supply chains collapsed and mines shut down, dropping production by 7%. But unlike 2008, this wasn't just a financial panic. It was an industrial revolution. Solar panels, electric vehicles, 5G networks, AI data centers, all of them consume massive amounts of silver. Industry analysts suggest that solar alone now eats up over 20% of the entire global supply. And solar deployment is doubling roughly every 3 years. From 2021 through 2025, the market has allegedly run deficits every single year. We aren't just dipping into savings, we are burning the furniture. Reports indicate that 2024 saw a record shortfall of around 280 million ounces, potentially the largest in history. The result? Silver has climbed from $18 in 2020 to over $64 today. That is a 250% increase in 5 years. 3 different cycles, 3 different crises, but the exact same math. And many believe the biggest move is still ahead of us. So why is 2026 the year the dam breaks? Because of a single geopolitical decision that changes the math for the entire planet. According to reports circulating in Shanghai, China is preparing to implement strict silver export restrictions starting in January 2026. Think about what that means. China is the world's largest producer of solar panels. They know they need every single ounce of silver they dig out of the ground to meet their own energy goals. By banning exports, they are effectively telling the West, good luck finding your own metal. This is the nuclear catalyst. It removes one of the world's largest suppliers from the global chessboard overnight. And the market knows it's coming. Look at India. Indian importers aren't waiting. They are panic buying record volumes right now, reportedly paying premiums of $7 over spot, just to get metal on the boat before the rules change. But the most telling signal is the ETF market. In early December 2025 alone, silver ETFs added approximately 590 tons of physical metal in a single week. That is the highest inflow rate since the silver squeeze of 2021. This isn't retail investors buying coins. This is institutional capital, hedge funds and family offices front-running the China ban. They are draining the London vaults because they know that come January, the for sale sign comes down. The lease rates in London have already spiked to 6.7%, 10 times the historical average. This is the market screaming that there is no metal to lend. The table is set for a supply shock that makes the 1980 Hunt Brothers squeeze look like a dress rehearsal. Now, I know what the skeptics are saying. They say, don't worry, technology will save us. If silver gets too expensive, we'll just use something else. People said the same thing about lithium in 2021 and palladium in 2019. It didn't happen then, and it won't happen now. Why? Because of physics. Silver has the highest electrical conductivity of any metal in the universe. It has the highest thermal conductivity. It is antibacterial. You cannot just swap it out for copper or aluminum without degrading the performance of your solar panel or EV battery. And in a world where efficiency is everything, degrading performance is not an option. But what about recycling? Recycling contributes roughly 200 million ounces a year. That sounds like a lot until you realize how silver is used. It isn't like gold, which sits in a vault. Silver is used in tiny microscopic amounts in billions of cell phones, light switches, and bandages. It is dispersed. Recovering it costs money. And solar panels? They last 25 years. The panels we are installing today won't be recycled until 2050. We cannot recycle our way out of a shortage happening in 2026. This leaves us with the most brutal number in the mining industry, 70%. An estimated 70% of all silver comes as a byproduct of lead, zinc, and copper mining. Unless the world suddenly needs 50% more lead, which it doesn't, miners aren't going to dig more holes just to get the silver. Supply is structurally capped. So we have an inelastic supply meeting an irreplaceable demand. When you run a deficit of 280 million ounces, like we did in 2024, in that environment, the price doesn't just drift up. It has to rise high enough to destroy demand. And since solar manufacturers must buy it, the price has to go to a level that forces someone else to sell. That level isn't $65. It isn't $75. The math says it starts at $100. So how does this play out? If we layer the supply deficit over the geopolitical calendar, we can practically draw a roadmap for the next 18 months. Q1 2026, the export shock, $65 to $70. This is when the reality of China's export restrictions hits the global ledger. As Chinese supply vanishes, industrial buyers in the West will scramble to secure 2026 inventory. Major institutions see this pushing us firmly into the high 60s. This is the wake-up phase, where the mainstream media starts asking why solar panels are getting more expensive. Q2 2026, the leopard zone, $75 to $80. By mid-year, if the deficit holds, global inventories could drop below 200 million ounces, a psychological danger zone representing less than 2 months of supply. This is where Lawrence Lepard's target of $75 comes into play. At this level, the short sellers on the COMEX begin to panic. The cost to maintain a short position becomes suicidal, triggering a short covering rally that acts like rocket fuel for the price. Q3 2026, the blue sky breakout, 80 to 100 plus. This is the moment the banks aren't talking about. By late summer, solar installation season hits its peak. If we see just one major industrial default, one tech giant unable to source metal, the price disconnects from reality. Analysts at BNP Paribas and Solomon Global have discussed $100 targets in this scenario. This is where FOMO, fear of missing out, hits the retail public. When your neighbor starts buying silver coins because he saw it on the news, the price can overshoot to $120 or $150 in a matter of weeks. We are looking at a potential 58% to 100% gain from today's levels in less than a year. The setup is asymmetric. The downside is limited because the industry needs the metal, but the upside is technically unlimited because you cannot print more silver. This brings us to the ultimate question. The financial establishment is telling you $75 is the ceiling. The supply-demand math suggests $75 is just the floor. I want to know where you stand. Do you think the banks are right, or is the math right? Go to the comments and type 75 or 100. Let's see if this community is bullish or conservative. So, if the pattern holds and we are heading to $100, how do you position yourself? There are 3 main vehicles, and each serves a different purpose in your portfolio. Vehicle 1 is physical silver. This is coins and bars in your own possession. This is for the doomsday insurance part of your brain. It has no counterparty risk. If the grid goes down or the banks close, you still own your wealth. The downside? Premiums are high, and you have to store it yourself. But in a true Stage 4 panic, this is the only asset that matters. Vehicle 2 is ETFs. Funds like the iShares Silver Trust, SLV, or the Sprott Physical Silver Trust, PSLV. These are for liquidity. You can buy and sell instantly with a click. But remember the musical chairs risk? If the financial system freezes, your paper claim might settle in cash, not metal. Vehicle 3 is mining stocks. This is the leveraged play. When silver rises 10%, mining profits often rise 30 or 40%. Companies like First Majestic, Pan American Silver, or Hecla Mining act like a turbocharger on the silver price. But be warned, miners carry operational risk. Mines can flood, workers can strike, and governments can raise taxes. High risk, massive reward. The setup right now is one of the most asymmetric I have ever seen. The downside risk? Maybe silver retreats to the mid-50s. The upside? A run to $100 or higher. That is a potential 5-to-1 risk-reward ratio. This brings us back to our mission. We are tracking this breakout every single day, and we have a goal. We are racing to hit 1,000 subscribers by December 31st, 2025. If we hit that number, I am going to release the killer video. This is the deep dive investigation into the silver manipulation files, the specific legal loopholes banks use to suppress the price. I am genuinely afraid to upload it, but for 1,000 insiders, I will take the risk. You have the data, you have the timeline, you have the targets. For thousands of years, silver has been the people's money. It has protected wealth during the Roman collapse, the Weimar inflation, and the 2008 crisis. Now, it is being called upon to save the green energy revolution. The pattern is repeating. The explosion is starting. You can either watch history happen, or you can be part of it. The choice is yours. Subscribe, turn on notifications, and get your house in order. Class dismissed.